Hello friends, welcome to today's session. Today we will learn what is revenue expenditure, what is capital expenditure and how they are different from each other. Before we go into understanding the difference between them, first let us understand what is expenditure. In technical terms, expenditure means amount which is spent or liability which is incurred for acquiring assets, goods or services. So in a business, when amount is being spent, money goes out from a cash or bank account or an liability is incurred, means a loan is raised so that you can spend that amount. And what is it being spent on? It could be when you're acquiring an asset in the nature of tangible assets, intangible assets. Tangible assets means your land, building, machinery, vehicle, computer, so on, furniture, etc. Or when you're trying to acquire some goods. Goods means those items which you deal with, which helps you in generating revenue. Or you are availing some services and you're paying for it, or you're incurred a liability that you have to pay for it. So those type of amounts which is spent or liability incurred, we call it as expenditure. Now there is another term, expenses. Now, is expenses and expenditure one and the same? No, there's a slight difference. When we talk about expenditure, it is talking about any amount spent or liability incurred for acquiring any of these assets, goods, or service. But when we are talking about expenses, it is normally the cost which is incurred for generating revenue. So that you can have revenue which can be in the form of sales or which can be in the form of fees that is collected for the services rendered, whatever be the nature of revenue. To generate that, whatever cost you have to incur, that is called as expenses. Like the purchase cost of goods that you want to resell, the wages that you pay to the workers who are manufacturing goods in the factory, so on. So those expenses, those items of cost are called as expenses. Expenses is a term which comes within expenditure. That you will understand when we understand the classification of the expenditure. Now going to classification of expenditure, you can classify expenditure into three categories: revenue expenditure, capital expenditure, deferred revenue expenditure. Now let us understand each one of them in detail. What is revenue expenditure? The expenditure which is incurred from which you are going to get benefit. When you incur an expenditure, some benefit is going to arise. You are not going to spend just for nothing. You are going to get something in return. So you are going to get some benefit. The benefit when it gets consumed or would be exhausted within that particular accounting year when it is incurred, then that is called as revenue expenditure. So what does this mean? Like you pay salary to your employees, they work for that particular month for which salary is paid. So the benefit you get that the work clerks or the staff are working in 1 month for the payment of salary made for the month. You rent out a building, you pay rent for a month. You're going to use that particular premises for which you've paid rent for that particular month. The benefit gets exhausted once that month is complete. Again, you have to pay. So the benefit that you get of occupying that property gets exhausted usually within that particular accounting year. So that type of expenditure, we call it as revenue expenditures. Now, important point about revenue expenditures, where do we show these revenue expenditures? Where does it come in the financial statements of a business? Usually, you would find this in the trading account or in your profit and loss account. In this, on the debit side of these accounts, you would find. So, to understand what are the items which come here, it can be in the nature of your purchases, whatever you have made, the cost of goods sold, you can say, cost of goods sold, whatever expenses you're incurring. Then you can have rent, salary, electricity expenses, And all other expenses like postage, printing and stationery, all these are, when you incur the expenditure, you are going to consume that within that particular accounting year. So these type of expenditures are called as revenue expenditure. I hope that is clear. Now let us look at capital expenditure. Capital expenditure, here also you are going to get benefit, but the benefit that you are getting is going to last for more than one accounting year. So what does this mean? This means that when you spend, and it is a nature, if you call it as capital expenditure, it means the benefit of the amount that you spend going to be available to your business not just 1 year but for more than 1 year, for several years you might. Normally it is in the form of assets that you acquire. When you assets are acquired, now what is assets? You know, those which are the resources owned by the business are called as assets. They will be used in the business, like your building, plant and machinery, computers, vehicles, so on. So when you acquire them, you're going to use it for a number of years. It's not that you're going to buy a machinery, use it for a year and it is over. No, it is going to be used for several years. Over its useful life, the value will get exhausted. But the benefit of buying that machinery would be available to business not just for one accounting. It is available, it can be used for a number of years. So the benefit extends over more than one accounting year, like when asset is acquired. Or when you improve existing assets, like you add a particular component to your existing machinery which would improve its capability of producing more number of units than before, then that expenditure that you incur is also under the category of capital expenditure. So basically, when you are purchasing a tangible, means you are spending money in acquiring tangible or intangible assets, then those items of expenditure is classified under capital expenditure. Now, where does it appear? You would show these items of capital expenditure in the balance sheet of the business on the asset side. It would be shown as an asset, land, building, plant and machinery, vehicle, computers, furniture. All those are shown on the asset side. So anything spent on them is in the nature of capital expenditure. So these are the items of capital expenditure. So now I hope the term capital expenditures is also clear to you. Finally, there is one more category of deferred revenue expenditure. This I will deal with separately in another topic in detail. Now, for the time being, having understood this individually, let us understand the difference between these two so that those two concepts sit very firmly in your memory. So, using this table, you can remember what is capital expenditure, what is revenue expenditure, and how they are different. So, on these following four bases, you can classify items into capital and revenue expenditure. First one is the benefits that you receive when you incur such an expenditure. When it's a capital expenditure, the benefit is of enduring nature, means you're going to get it for a longer period of time. Over a number of accounting years, you're going to get the benefit. Whereas if it is a revenue expenditure, normally the benefits get consumed in just one accounting year. Second basis is on the basis of recurrence. Normally, you don't keep buying machinery or furniture every year. So it is not going to be very frequently recurring. You might buy it in a couple of years or in 5 years once, like that. You might be adding up new machineries or new furniture items, but you're not going to be buying it regular basis, like the goods that you buy for trading or manufacturing. Then the revenue expenditure on the basis of recurrence, it's of recurring nature. To occupy a building, you have to keep paying rent every month. To have your staff work for you, you have to pay them salary every month. You need stationery regularly in the office to be used. So you have to keep incurring expenditure on printing and stationery items. So these are the items which are recurring in nature. Third point of difference is on the basis of presentation. Where do you put that in the financial statements of a business? Capital expenditure would be shown in the asset side of the balance sheet, whereas revenue expenditure would be on the debit side of either trading account or profit and loss account on the basis of whether that expenditure is direct or indirect expense. Finally, examples that you can give for capital expenditures when you incur, purchase some tangible or intangible assets, or you enhance the capability of your tangible assets, then existing assets, those are in the nature of capital expenditure. Whereas revenue expenditure is normally in the nature of rent, salary, cost of goods sold, like your carriage inward, freight inward, custom duties, and all other expenses that you regularly incur so that you can generate revenue. So that type of expenditures you can put it under revenue expenditure. So I hope with this explanation in a tabular form, the distinction between capital and revenue expenditure is very clear to you, because these concepts are the basics which have to be understood for further studies. I hope this video was helpful to you. So if you found this video helpful, please do like and share it. And if you have not yet subscribed to the channel, please do subscribe to the channel to get continued notification of all my upcoming videos. I'll keep posting regularly videos on accountancy concepts related to both 11th and 12th on regular basis. So please do subscribe to the channel and stay tuned. Thank you.